All right, welcome back. It is my pleasure to introduce our next instructor, Miss Judith Dettwiller. Judith is an advisory services manager at the Louisiana Legislative Auditor's Office and has been with the LLA since 2012. Judy is a certified public accountant, a certified internal auditor, and a member of the American Institute of Certified Public Accountants and the Society of Louisiana Certified Public Accountants. Judy works in advisory services, providing guidance and recommendations to local governments for implementing and strengthening internal controls, ensuring compliance with laws, and implementing good business practices. Please welcome Ms. Judith Dettwiller.
Hey everybody, how are you? I'm so glad to be back here since our last CLGE. And what a tough act to follow. I don't know about y'all, but I'm always so amazed at how much Patrick knows. I don't know, it makes me doubt myself. But I'm very glad that I got to follow him. I just wanted to again thank you all for joining us, and we're so glad you can be here. Don't forget at the end of all these sessions to fill out your questionnaires that you get, because we want to know what classes you want. This class was specifically geared towards requests from people from the last CLGE. So remember, we are listening to you and we want to give you what you're in need of. So let's get going on with our capital asset management. So just a little basis of our objective, as everybody knows, we're trying to help you establish a good system of control. So we want to go from start to finish on capital assets and things you should be doing, accounting for, and what you need to be watching when it comes to capital assets. But we also want to include and remind you all that you also have to account for the future capital asset needs, maintenance, replacement, everything such as that. So we're going to start with our very first question. What is a capital asset? So an asset is a resource with some sort of economic value to the government, and it's going to help provide for future benefit. They're usually bought or created, and they're going to benefit the overall operations. A capital asset can be tangible or intangible, though in government they're usually tangible. And we have something we use called a capitalization threshold and an estimated useful life. We expect that the estimated useful life for something that has been capitalized to be at least 1 year or more. And we'll go over some details in that. When an outlay or an expenditure is reported on the statement of net position, this is where we're getting that it's capitalized. So what that means is it's not expense as your normal expense. Instead, it's recorded on your statement of net position, and then it's depreciated except for land. And one thing to remember is we have dollar thresholds that we want to account for in there. And you're going to put it on your net position, statement of net position at your historical cost usually. If it's donated, it's the estimated fair value of when it was donated. And you can help, work with your CPA or accountant if you're not sure of how to come up with the estimated fair value for that. Some examples of capital assets are land, building improvements, roads, bridges, things such as that, furniture, equipment, cars, fire trucks, anything along those lines. So we're going to first start with the capitalization threshold. So what does this mean? This means that purchases that you make over a certain dollar amount are not going to be expensed all at once. Instead, they're going to show up on your statement of net position, and they're going to be depreciated, again, except for land. You're going to want to work with your auditor, your in-house expert, to help decide what is a good amount for you. For a smaller government, it might be $1,000. For some larger governments, it may be $10,000 or more. So you're going to need to work and come up with what is best for you. And you can also use different thresholds for different classes of assets, so that you can make sure that you're minimizing your record keeping, but you're getting what you need. However, if you do come up with your thresholds, make sure to keep it consistent between items year over year. So a good example would be if you bought an item A, and it was $11,000, your capitalization threshold was $10,000. Therefore, that item was capitalized. A couple years later, you have to buy a second one of those items, item B. Now the price has gone down in that item and it's $9,000. For consistency purposes, you may want to consider capitalizing that $9,000 item B, even though it is still under your capitalization threshold. And a little note that recently came out in the GASB Implementation Guide, the 2021, there was a question that came in that wanted to know about whether your capitalization policy should apply to just an individual asset or groups of assets. So say you bought, your capitalization threshold is $5,000 and you bought 100 computers, but the computers are only 1,500s. Would you capitalize that? Since the purchase is all together, GASB's answer is yes, you're going to capitalize the bulk purchase, although you may not track each individual computer. So remember, what you capitalize that shows up on your statement of net position does not always have to be tracked. And there are going to be instances where sometimes you're going to track things that may not be capitalized. So those things that are easily susceptible to theft but may have a lower dollar value. A laptop computer, things like that. And that again is going to come to your individual decision for your entity and what works for you. Some things to keep in mind with that implementation guide is this is going to be in effect for 2023 to 2024 fiscal year end. And those changes are going to be required to be made retroactively. You're going to have to restate your prior period presentation, and it's going to have a cumulative effect on prior periods. It's going to be reported as a restatement of your beginning net position or fund net position, however it's applicable. And again, you can get with your auditor or your contract accountant or whoever to help you get that implemented correctly. So the next step is, once you've decided that something has met your capitalization threshold, you need to come up and determine how long you're going to depreciate that item for. So that's going to be your estimated useful life. You want to make sure it is over 1 year, or else you're not going to capitalize it. You're going to expense it at purchase, which would show up on your statement of activities. So these are the recommended estimated useful lives that we have on our website, and this is a good starting point to go for. You're going to remember, again, land is not depreciated, but everything else is. Your roads, your bridges, your water systems, sewer systems, everything such as that. So if you have any questions, I'm sorry, this is a good guide to look for, and again, work with your auditor. Now, one thing that you need to remember is that in Louisiana, we have a special law. We have a revised statute 24515B, and this is applicable to anybody that is required to report to the legislative auditor. Those are people that gets audits, review attests, compilations, sworn financial statements. Anything that reports to our office under 24513, you have to maintain records of your land, building, fixed assets, just basically your general capital assets. And those records have to have some specific things per the law, which are going to be the date of purchase, description, cost, and if you dispose of the item, records of that disposition. So the entity head or their designee, so it could be whoever a superintendent is, or if it's a smaller entity, it could be the mayor, or whoever they designate. If they have someone that's over capital assets, then it's that person. So they are responsible for recording, tagging, and coordinating an annual inventory of those assets, okay? You want to make sure that at least annually those capital asset listings are updated for any acquisitions, any disposals, things such as that. And then that makes it easier to identify any possible theft, misuse, things that are destroyed that are no longer usable and things like that. And to remember what we said earlier about just because something is not capitalized, you may want to track it if it's susceptible to theft, and that would be part of your inventory listing. So that way it would be easier to track and get to everything together. So we'll start with, you have your listing in play already. So let's pretend that's in there. But during the year, you acquire some capital assets. So the best way to start with this process of how to get those assets added to your capital asset listing so that it all stays accurate is whoever has ordered, purchased, received an item that should be capitalized. So usually it's a department head. For smaller entities, it's just the clerk. But whoever is in charge of that purchase needs to notify whoever is over accounting and say, hey, I just bought a backhoe for the sewer department and it's $150,000. It needs to be on our capital asset listing. So make sure that they notify the entity head or whoever's over your capital asset department. Okay. Oops, sorry. Then your entity head is going to make sure that they get all the supporting document. You're going to want everything that you can in one place to keep your record straight. So you're going to want to make sure that you have all the supporting document for that purchase, the purchase order, the invoices, everything that goes with that. You're going to also want to make sure that you have a full description of the asset. If possible, it's a good idea to have a picture of the asset so that it's easily identifiable. You want to have the date of acquisition. You want to have where this asset is located. Is this something that is going to be used by our rec department? Or is it something that's used by our sewer department? So you want to know where it's located and what department it's in. You want to have the cost, and if it was a donated item, remember you're going to use the fair value at the donation date. If there are any warranties that come with this item, it's a good idea to have those warranties in with the same records for everything you have for it. You want your maintenance record and history so you know if you've done repairs on this item, where it goes. You want a condition rating, and that's going to help when we go later to our future planning and things like that. You want to know, how is it doing? Is it looking? Is it holding up? Or is it wearing out easily? And that's also going to help you determine when you want to repurchase items. If this certain things didn't do well, maybe we need to look something else. You want your salvage value and always, as always, your estimated useful life. So once the entity head or the designee gets all of this information, they're going to take everything and they're going to assign it a tag or identification number. So your tag number should generally have the name of your entity and a unique identifying number. You maybe have your identifying numbers by department or by asset type. So it could be, like 3 sets of 3 numbers. It could be for the rec district, major motor vehicles, and then this is the number 1. So it could be 001-001-001. You come up with what works for you so that you can easily identify what goes with what. Now remember, for motor vehicles, it may not be easy to do a capital asset tag, so you are allowed to use the VIN number for things like that. Just make sure you have a good record of that VIN number in your listing and records for future use so that you can find it. Now, you're also going to want to take an annual physical inventory. So this is going to come in play throughout the year. You're going to be adding additions to it. You're also going to be adding things that you dispose of throughout the year so that it's really an updated record and a living record throughout the year. But at least once a year, you're going to want to inventory those items to make sure that your listing that you have on record matches what is actually there. So we have a best practice. We recommend at least 15 days before the year end that you get a complete listing of the assets per department and give those to those department heads so that they can start their physical inventory. For larger entities, it may be a rotating inventory process throughout the year, but you want to make sure every department and every item is at least part of an inventory once a year. I'm sorry. Some things that you're going to want to include in your inventory list for when you're doing it. It's not going to be everything that is in your records, but you're going to want things that make it easy to find the items in your inventory. And this is where those photos are going to come in play. You're going to want the capital asset description, and if you have the photo, you're going to put that. And where the photo comes in is it may say backhoe, and that's a description that somebody put in, but the person that put it in didn't know what a backhoe was, and it's actually a hauler, a digger thing, which I know that's really horrible. And if I was doing capital assets, it would be called a digger thing. So you have your photo so that you can verify what it is. You also want to know the location where the item is. Sometimes there are going to be things that are set for disposal, and they may be in the disposal truck, so they're not going to be where they were. You want to make sure that your record indicates exactly where it is. You want the tag number on the item. You want the original value on your listing, and you want your condition rating. We're going to go over the condition rating on our next slide, and I'll give you some examples of what to do. But again, the reason that we want this condition rating is because it's going to help you determine if things are living up to their useful life, if you need to find a way to budget more money to replace this sooner than you anticipated, things such as that. So your condition rating, as I said, it's going to help you determine when repairs are needed, replacements, if something needs to be disposed of because it's unusable, you're going to put all that. There may be a motor vehicle that was in a wreck and it's just waiting to determine what to do with it. Is it going to be totaled by the insurance company? So that's why you want that condition rating. This is an example of a condition rating listing that I found. Feel free to use this, but this is not something that you have to use. This is just a little example that I have. So on your listing, you would have a place with condition rating. New would mean it's brand new, just placed in service, looking great, everything's working fine, it's great. Good means it may be a year or two old, but it's still working fine and everything's good and we don't need to worry about it. Then you have F for fair. That means, hey, it's still working, but we may want to consider in the next few years that we're going to have to replace this item. Is this item that we're actually going to need, or is it something that we can do without? Then you have poor, and this is, okay, this thing is on its last leg. We may get another year out of it. We need to start looking into the disposal process for this, or we need to see how we can replace it, things such as that. Then you have an O for out of service, and this is usually going to indicate something that needs repair, but it hasn't started the repair process yet. It's something that, it may be a motor vehicle, again, that's lost a bumper, so you just need to wait for that bumper to be replaced, but it will be repaired. And then you have being repaired. So this is something that's going to be in your in-house shop. It's going to be out of your custody and a repair shop, but it's something that is currently being repaired. Okay. And as part of your annual physical inventory, you're going to start with the department heads get their lists that have all those items on it. They understand how you want your condition ratings listed and where to go. And they're going to make every effort to locate each and every asset on that list, okay? They want to make sure that they observe and put their eyes on the item. You don't want to just assume that something's there. You want to see it. You want to make sure that the tag number on that item you see matches the tag number on your listing. Once you've matched the tag number to the tag number and you know it's right there, then you're going to put a check next to it and say, hey, everything's great. And then you're going to note your condition and say this thing is in, poor shape, it's in fair shape, it's in good shape, whatever condition rating you decide on. You also want to make sure that the asset location that is shown on your listing is actually where it is. A lot of times in schools, teachers are going to share AV equipment. So it may be that you're showing in classroom A, the AV equipment tag number 0042 is supposed to be there, but when you go to actually inventory it, you see that it's actually in classroom Z. So it may not be that big of a deal. It may be, you just kind of need to know a general range of where it is, but you want to make sure that you have on your asset listing where it's supposed to be. If it's not in one school, but it's in another school, you definitely want to note that. Because you don't want things moving around too much. When they move around too much, you lose track of them and they can get lost and they can get stolen. Sorry, guys. If you cannot find an asset at all, then it is nowhere to be found and you've pulled all the stops and nobody can find it, then you're going to put an X next to that asset on your listing. and you're going to immediately notify your entity head. They can investigate further. They can make sure that it's not somewhere that you were unaware of that it's supposed to be. They can make sure it's not in the repair shop and you're unaware of that. Or they can say, hey, this item's missing. We might need to start an investigation on this. If they decide that this item is missing and they may need to start an investigation on it, then they're going to also have to notify the district attorney and the legislative auditor, because there may be a possible misappropriation of asset. So you just want to take that very seriously. Make sure you've, turned every stone, and if you cannot find it, then where to go. Okay. Once you have this inventory done, you've noted what is there and what isn't there, another step you need to do is your department heads need to see if there's something that is here that maybe doesn't have a tag and maybe it's supposed to. That is going to be over that threshold, something really big. Again, going back to motor vehicles, if there is a car there that, says town of ABC, and you don't show that VIN number in your inventory tracking, make sure to note that as well, because that may be in the wrong location when you have it and it's in somebody else's location. So you want to have that noted where they can go back and look for that and see if that's supposed to go someplace else. And then once all that's done, the department heads are going to sign and date their inventory listing that they, certify that everything is complete and that they've done their best and due diligence to find what they need to and verify that everything is there as it's supposed to be. Then they're going to give that listing to the entity head or the designee, as we talked about. And then that's where they're going to come in and they're going to verify one between the other. Those items that you said that you found that shouldn't be with you, they're going to look to see if another department is missing it. Now, this is something you really don't want to happen often. So, when things move between departments, you want to try to be cognizant that it is noted and that the inventory asset listing is updated. But we know sometimes things happen, and that's where this review of everything's going to come in place. So the person that's over the capital asset inventory is going to review everything, as we said. They're going to make any notes they have to, make any adjustments they have to. They can, then they're going to go into their asset listing and they're going to update anything. If locations were different, they're going to update it. If something is shown as, it's beyond poor condition, it's really needs to go in the trash, then they're going to make a note of that and update their listing accordingly. Okay, once everything is done and all updates have been made and everything's together and straight, and they've verified everything and they've matched each thing in and of itself, then they're going to go ahead and print a final copy of the capital asset listing. And this final copy is, you want to make sure your accounting records and everything's updated, but this final copy is what you're going to give to your auditor. So the auditor can then verify that everything's there. Sometimes your auditor wants to take part of your inventory process. So, make sure before you're starting your annual physical inventory that your auditor is aware, so that if they want to be there for observation, they can. But, you're going to keep all that. And like I said, once the listing is straight, you have your listing straight, then you're going to do any changes that you need to your accounting record and accounting system. So just make sure all the accounting records are taken care of as well. You're also, any of those items that were marked as poor or that are completely impaired, if the car that was in a crash, there's nothing that can be done with it, it is in pieces or it's a little smushed box, and the insurance has ruled it as, a total demolished, then you're going to begin your process to dispose of those items, okay? And we're going to go over next some basics in how to dispose of the items. For a lot more details in this whole process, I'm going to recommend that you go to our legal FAQ. Again, that is a wonderful resource. Use that, use it. So your auditor may be able to help you, your contract accountant, and our office can help you with the nuances of this. But you want to make sure that any impairment that you noted during this process, anything that is no longer being used by a department, anything along those lines, if you have an item that hasn't got so much dust on it because it hasn't been used in 15 years, you may want to think about disposing of that as well. And that would have been noted on your inventory process. Okay, but also remember that during the year, this deletion and disposal of capital assets is not going to just take place at the time of your annual inventory, although this is when a lot of it is going to take place. So during the year, if the entity department heads see that something's ruined, car wrecks don't happen at it just whenever, you're going to want to make sure that you notify whoever's over that, the entity or the designee, and then go with the disposition process at that point. Okay, some examples of things that can happen throughout the year that may not require to be part of your annual inventory, but may still permanently impair an item are going to be if you have a flood, a fire, a storm, anything along those lines that permanently damages something that you use. If the building floods and it was the parking garage with all the cars in it, or even if the building has major damage. If the DEQ or EEQ comes out with new water quality standards for treatment plants, so what you're using right now is no longer useful, you have to get a new plant in, or new chemicals or whatever, you dispose of those. If you have some sort of high-tech equipment, anything like that the technology has outlived it, it's no longer useful. A big example I think of is, a fax machine. While some people still use fax machines, a lot of times those items are emailed. And if you had a very high-tech fax machine, that may have fallen into your capitalization threshold. So you're going to want to make sure that you dispose of that properly. Another big thing is school closures. So if student counts go down and your student population changes and you have to close a school before the building has been fully depreciated, that's something you're going to have to dispose of. You're going to have to see if you can sell it off school board, and then take care of your accounting records and dispose of that. Again, for the nuances and everything on how to do this, you're going to contact our legal department. But again, here we go, that's what I said. You're going to consult with your legal counsel or our legal counsel. Our legal counsel may not be able to give you every answer, so your own legal counsel may be able to help, but our legal counsel can guide you in what to do. You're going to make sure that you are not in non-compliance with any state laws or anything like that as far as the sale, exchange, anything with assets, properties, anything like that. You want to be very, very careful with that. You want to make sure that the people within your entity are not buying this. There's special laws over that, so you want to make sure that you're not breaking anything as it pertains to state law with the disposal of those capital assets. You want to make sure that all the related documents are maintained even after disposal. So you want to make sure that there's a board resolution, that you had appraisals if needed, that you advertised for the sale, that you received the bids that you were supposed to. And you want to keep those just for your audit records and for your public record requests and everything that you need to, so that you show that you did dispose of this asset in the proper way and that you did not break any state laws or anything like that. You want to make sure that that asset is then removed from your capital asset listing, both internally and externally. And you want to make sure that your accounting records are updated, okay? So it's going to include some updates to the statement of activities, the statement of revenue, expenses, and changes in fund balance. But, really get with your auditor, your contract accountant. You may have an in-house expert that can give you the full details on that. But make sure your accounting records and your asset listing records are all updated according to what you have done when it comes to the disposal of this item. Now, the next thing we need to consider and think about is how are we planning for the repair, the replacement of these capital assets. So if we've disposed of something, do we have the resources available to replace that item? If that item needs repair, do we have the resources available to pay for the maintenance and repair of that item? And this is a big thing that I want all of you to consider very carefully, especially with all these ARPA funds coming in. A lot of you are going to go buy very large capital asset purchases, and the ARPA funds are generally better used for a one-time purchase. But when you're thinking about that one-time purchase, you need to think of the long-term repercussions of that one-time purchase. So if I am buying a new water tower or water tank, yeah, I mean, that's a lot of money and I have ARPA funds and my town needs it. But can you then pay for that water tank to be repaired, to be replaced, to be serviced, to be inspected, everything like that it's supposed to? So you need to really make sure that you're taking all those considerations into play when you're doing that. And you want to, do that in your planning process. You're going to meet with your board and everything comes up with that. A big thing that you need to consider is whether you're using the ARPA funds or not for future maintenance and replacement needs. You need to see if there's a way to have a dedicated fund or some sort of other revenue source that's going to help you keep those same service levels for your capital assets that you've always had, so that your constituents or your citizens are not going without what they need to. Are you going to be able to replace the sewer pipe cleaner? If you have a sewer system. So keep all that in example. And and going back to the water tank thing, that's a lot of money. So a water tank should be inspected every 3 to 5 years, and it's probably going to need to be recoated every 10 years, every 10 to 15 years. So a recoating of a water tank, I think, is going to run about $200,000. So you want to make sure that you have that. And just a little side note, when it comes to your water systems, I just want everybody to remember that water systems with populations greater than $3,300 are required to come up with a risk plan, a risk and resilient assessment plan for the EPA. This came into play in 2018. I'm sorry. So remember, when you're spending that money, do you have the resources to maintain and replace it in the future as you need to? Sorry. And so, like we talked about, you want to make sure that you have the funding, you have some dedicated resources. But a way to get this to happen is your capital asset person should, every 2 to 3 years, develop some sort of plain language report on your capital assets. You want to present this to your elected officials, your board, your entity head, anything like that. And you also want to notify your general public so they're kind of aware of where things are. And if you're needing money spent to replace something, they kind of know where things are and how things are going to be. And so you want to come up with your plain language report. And the reason we're calling it a plain language report is you want it so that someone that is not familiar with all the accounting terminology understands what you are trying to tell them. That, in the future you may need A, B, C, and D, or things may have changed, so you're going to need to replace things quicker or not as quickly as you thought in your original capital asset planning budget. Excuse me, I'm sorry. So some items you want to make sure are addressed in your plain language report is that condition that we talked about. Your condition rating, you want to compare it to your established standards and things like that. You also want to do your condition rating by geographic area, class, and things like that. So one thing I want you to consider when you're coming up with this is you may have said that, okay, the roads need to be resurfaced every 30 to 40 years. So we're going to plan and we're going to put aside money to resurface on a rotating basis all the roads in our municipality every 40 years. So then you find out that, hey, traffic patterns have changed. We're not getting as much traffic going through our municipality as we once did. So now we think these roads may only need resurfacing every 40 to 45 years. So those are the type of things you're going to put in that plain language report to let them know. Let's go back to our water tank again. So if your water tank is inspected every 3 to 5 years, as we talk about, the tank is totally emptied. You have an inspector that goes through that tank with a fine-tooth comb. They're looking to see if there's any chips in the coating, any cracks, anything like that. And you anticipated every 15 years you were going to have to recoat this tank at a $200,000 cost, and that was what was budgeted. But in your first inspection, the inspector notes that, hey, this paint isn't holding up as good as we thought it was going to be. You may get 10 years at best. So you're going to update that so that you can anticipate the need to possibly come up with that $200,000 for recoating a lot quicker than you thought. So that's all going to be part of your condition rating and where you're going to put things in and how you want things noted in this report. Another thing you want to do is, some sort of indirect condition data. So were there water main breaks? Have we been getting complaints about sewer backup? You may not be able to see that the sewer pipes are having trouble, but if you're getting complaints of backups, that's it. If your water system is running through a lot more water than what you think it should, you're showing 10,000 gallons going out or 1,000,000 gallons going out. However, you're only able to bill for 800,000 gallons. Then those are going to be things that you kind of want to look at and say, hey, we need to do some real deep inspections on these water mains, on these water pipes, on things like that, because we have a break somewhere that is, wasting our water. Or, sewers backing up. There may be a big clog somewhere, and we need to consider investing in some research and digging in, finding out where this clog is and getting things there. You're also going to want to look at, talk about your renewal and replacement life cycles on your infrastructure. That's where we talk about the roads, the water tanks, all those sort of things. You want to make sure that the typical life cycles for each of those items, when you anticipate to renew, and if those are changed and you need to update it, you want to update all that in your plain language report. You don't want somebody saying, hey, in the last plain language report, you said that we were going to replace everything every 40 years and all the roads, and now you're saying we're going to replace the roads every 30 years. So you want to say, hey, this is the typical life cycle of these things is 40 years. However, we're finding that usage is more than what we thought. So therefore, we're going to have to replace it in 30 years typically. So you want to make sure that they have the details that they need to make things understandable and they know where you're coming from. Excuse me again. I'm sorry, guys. You also want to talk about in this plain language report what your funding sources are. There may be some restrictions that are imposed on use or disposal of the older items, but you're going to give some details on that where you can and see what's happening. Do you have enough funding for this? Did this water tank needs to be recoated 5 years earlier than we thought? We had dedicated funds, but we're only going to have 150,000 at that point. We need to find some other way to come up with the extra 50,000 that's going to be needed to recoat this. So you're going to talk about things like that. And again, this is going to be released to the general public, so they're going to kind of understand where you're coming from on all this. You also want to talk about year-to-year changes in your net asset values. Sorry, I just saw that I had one bullet twice, so please ignore that number 6 there. So those are going to be where you're going to look at your depreciated amounts. Okay, this item was purchased at this. We depreciated over a 5-year estimated useful life. We are at the end of the 5 years. The book value is 0. And this is where it stands, but we find that this item, may be worth more than what it is if we want to dispose of it. And so you kind of want to report on all that and see where things are and what stands and where, kind of what you can give them information on. You also want to know about the actual expenditures. What are you paying for repairs and maintenance on these items? Because repairs and maintenance are going to happen annually. They're not going to only happen when you need it. It's best to try and plan for those repair and maintenance as you can to keep the items operating as you can. But that sometimes they're unexpected and you need to have that in your budget as well. So that's all going to be part of this report. Hey, we're doing this report every 3 years. We budgeted to do 10 miles of streets every 3 years. but we actually were able to do 20 miles of streets, or we were actually only able to do, 5 miles of streets. You want to do your performance data. Hey, this road is, or I'm sorry, performance data, like the equipment that we're using, the computers that we have are working well, but we need new software to make them work up to where they need to. And then you also want to, go into a little bit more about your renewal and replacement and compare your budget expenditures. Hey, we're budgeted this much, this is how much we've used, and we're getting all the usage that we thought out of this, and things are running well, and we're real happy with the way everything is. You want to look at long-term trends. So this is going to be, okay, every year our expenses for these roads are going up and up and up. Weather changes, weather patterns are changing. We're finding that we're having more mud coming out from under the road, so we're getting more potholes than what we anticipated. Or the people are using the rec department more, so we need to invest more in the infrastructure of the rec department. Or the school is not being used quite as much, the school population has gone down. So you're going to kind of look at your trends year to year and put information in that. You also want to take into account some inflation rates. Your accounting can help you with this, your your auditor. And then you want to see, is there any change in supply and cost of constructions and stuff like that? So we anticipated that it was going to cost $10,000 per mile of road, but with inflation rate up and supplies costing more, it's actually costing $15,000 per road. So you want to give a good reason on why you may be going over or under budget, and you want to take all that into account. And again, put this all in the report so that everybody can understand where you're coming from. You also want to look at some global measures and replacement cycles. So this is going back to what we talked about. Your miles of sewer, your water mains, your water storage tanks, your street lights. You want to look at your book value. You want to make sure that everything is being used, replaced as it's supposed to. Is it getting more mileage or more usage than it was supposed to? Is it not giving it enough? And this is all our roads. So let's, instead of saying, roads in the northeast quadrant of our town are having troubles, but those over in the northwestern quadrant are doing just fine. This one is roads overall in our entire municipality is having issues, or is not having issues, or, where things are standing and what things are. And so you kind of want to give them a good global picture. Now, the big thing, as we said, you want to make sure that they totally understand this, and that they are have a clear picture, so that they're not fighting you on the funding. They're knowing, hey, we've got to repave these roads, and this is why. The roads in the northeastern quadrant are breaking down a lot quicker, so we may think that they're getting replaced more, and it's because the officials like them better, but it's because they're having more rain and getting more mud worn off or anything like that. Or their water tank, the coating didn't last as long, so take all of that in consideration and make sure everybody understands why you're doing what you're doing and where you're coming from, and make sure you are always planning for those replacement needs. So I finished a little quicker than normal, so I'm going to look at some of the questions. I do want to remind everybody that if before I get to your questions, if you have any further needs or questions, or want help in developing your own capital asset policy and procedure, my contact information is on the last slide. Feel free to please reach out and let me know if you have any questions. If you need any help, me or one of our staff can help you with all of that. So let me see if I have some questions. I'm sorry. Somebody said, is it considered a capital asset even if it was purchased with LGAP money? So if you own that asset and it's your possession, and then yes, you're going to own that. That is going to be a capital asset for you. So it's going to, and the big thing to remember is capital asset, that word capitalized, is just really how it's presented. So it may not be shown as an expense. You know, this LGAP money, I'm not really sure how you're reporting for that. I think it's coming in, you know, as a revenue source, maybe a grant or something like that, but it's still the expense that's going to come out of it, and that's what you're going to be showing. Instead of an expense, it's going to go on your statement of net position, and it's going to be capitalized and depreciated unless it is land, as we talked about. Should vehicles purchased that are utilized by detectives or someone with duties that are affiliated with the courts have public plates? Okay, well, that is a question that I can't answer you for sure. That would be one that you're going to need to contact Patrick Ferragamo, Jennifer Shea, Angela Heath, one of our legal staff. They can tell you the ins and outs and the details on that. I would hate to answer that. That is a legal question, and that is beyond my expertise on that. The next question: if you have items on your depreciation schedule that were assigned asset numbers on your accounting software, but the assets do not have tags, what should you do? So the best thing is when you are doing your next inventory, or even before then, you're going to want to get those tags on there. You don't want items not to be tagged. They're a lot more susceptible to walk if you don't have tag identifying that they belong to you. But it's also a big thing, you know, it's easier for you to track and you know where things are. So if you do not have a tag on something currently, you're going to want to get it tagged as quickly as you can. And that would probably be the best way. You know, if you can do it now, it may be a little process. It may happen when you do your inventory, but the sooner you can get it done, the better. On the issue where the insurance has declared a vehicle as totaled, if the vehicle is insured and it has been totaled, the vehicle gets into the possession or turned over to the insurance company. So the entity owner does not have rights to the vehicle. That will need to be turned into an insurance company for a claim on the vehicle total. So you are correct. That is going to be handled a little bit differently. I was just using that as an example in trying to think of something that would make it unusable. We do have some information in our legal FAQ on how that is going to be handled. That is handled a little bit differently, but make sure that you go to your legal FAQ. 100 computers where the threshold is exceeded. So I'm not quite sure what this question is. I think they're asking, you know, what do you do to depreciate? So you may not track all of those computers, but you may capitalize the total dollar amount. So the total dollar amount for the complete purchase of all 100 at once is $150,000. So you're not going to tag and track all of those because remember, tracking and capitalizing are not necessarily the same thing. They generally go hand in hand, but they do not have to, because there are going to be things that you're going to track that may not be capitalized. Those that are susceptible to theft and easily, you know, walkable, but may be under the dollar threshold. So if you buy 100 computers at $1,500, that $1,500 in and of itself is less than your capitalization threshold, but as a bulk purchase, that $150,000 is not. So you're going to put that $150,000 in computers on your net position, statement of net position, and you're going to depreciate it as you would anything in that that family, you know, that whatever your estimated useful life is. But you do not have to track those computers. So just remember, just because you capitalize something, you do not have to track it. And I think that was the follow-up question. So there is a question that's asked, any suggestions on how to dispose of obsolete computers? I know this is a question that has come in a lot. Our legal FAQ has some very good questions on it. Again, contact our legal staff. This is one of those things that we know is hard to dispose of because nobody wants an old useless computer. But there are people sometimes that wants the parts from the computer. They may have salvage things in there that they can use, but they so they might buy it for that part, but not the computer to use as a computer. Again, though, go to our contact our legal department, look at the legal FAQ, and I know this question has been asked before, so they should have some information on you. So somebody's asking me to repeat what I said about the 2018. And what that 2018 is that is something that came from the EPA. That has really nothing to do with this. It's just that the EPA for sewer systems that serve customers of 3,300 or more, you have to do a risk assessment on a risk, and I'm sorry, I can't remember the name of it. But it's to make sure that you can fund your sewer system repairs and things like that, and it has to be turned into the EPA. I suggest you go to the EPA website, and they're going to have information on it. I think it's the American Infrastructure Act of 2018. That may not be the exact title, but they'll give you things, and it's only going to be applicable to those that have sewer and water systems that serve 3,300 customers or more. And this was asked again about the risk and resiliency plan. Again, go to your EPA and find out. Okay, would buses be listed under vehicles in useful life? Yes. So buses would be listed as a motor vehicle, and you're going to depreciate that at your useful life. Now remember, our estimated useful lives are not set in stone. If you and your CPA say, you know, hey, buses aren't your typical cars, they may have a longer useful life, let's depreciate it out. You need to get with your CPA, and there's going to be some other repercussions and laws that come into the full depreciation and estimated useful life amounts. But get with your CPA to do that, and you know, ask them and determine where things need to go. So somebody's saying, can a separate listing be maintained for those sensitive items that do not meet the threshold? So yes, you can. So if things are susceptible to theft, that may be department wide that keeps up with it. If it is, you know, the $300 walkie-talkies that are used in the sewer and maintenance department, they may only be responsible for tracking that, but your overall inventory person. You just want to make sure that there's some sort of controls and tags and some tracking on things that may walk easily. So it doesn't have to be the full details in the inventory listing. It sometimes is easier to add it in the inventory listing, especially if it's things like laptops and stuff like that. But that's going to be up to you as an entity individual to work with your accountant, your staff, you know, whatever you need to figure out what works best for you, because it's not a one size fits all type thing. I'm sorry, it's taken me a little while to read this. So someone asked about the computers. How do you remove them if they're not being tracked? So it still has to be disposed of as any other asset, whether it's capitalized or not. That $150,000 that's showing up in your capital items on your statement of net position is just a dollar threshold. So you're going to keep up with that. If you go to dispose it and it hasn't been completely depreciated, then you would work it just as you would anything else. Just because it's not tracked does not mean that you have to take care of things. Now, if you find the vast majority are non-usable, and you know some are, so you're going to still be using some, that would be an impairment that you're going to want to run by your accountant to see how best to handle that. And I think that's all the questions I have. I really, really appreciate your time. Sorry it took me so long to read that and I had to take so many water breaks. I hope this is helpful. Again, as I said, please feel free to reach out to me or anybody in my staff if you have any further questions or need help. And don't forget to use that legal FAQ. That is a great resource and will help you with so much stuff and help you get to where you need to be. And I look forward to seeing y'all hopefully in the next CLGE. Thank you.